Well, I've got everybody's favorite topic today, tax, right before Memorial Day. What could you want more than to spend a little time learning about current events and different enforcement activities that are going on with the Internal Revenue Service? Kind of like death and tax, they're sort of people's favorite topics, or maybe not. You've got your tax season that just finished, so maybe you have I'll be able to point out some things that you can worry about, or maybe if you haven't filed your return yet, things that you can fix beforehand. I'm joking a little bit there. Not really going to talk about individual stuff. I'm going to focus more on business type tax issues that are coming up. As a little precursor, sort of what I'm going to try to do today is talk about a few little current events that are going on. We talked about the politics, so I'm going to talk about that at the start. Talk a little bit about sort of a bombshell thing that's going on in the tax world, and that is that the IRS is getting about $80 billion of funding, already got some of it, and it's going to be coming, and they're hiring new employees all the time. So that's a big topic. Then also want to delve into some civil topics from the Large Business and International Tax Group, some of the topics that they've seen to be important enough to start actual campaigns over. Then talking about some of the criminal tax enforcement topics that are sort of hot right now. And then I'm going to finish up with what I think is good information, and that if you have any problems with these civil issues or these criminal issues, or not necessarily active but possible in the future, that there's some solutions that you or your company could implement to avoid them. And it's always better to avoid, because once the IRS gets onto you, it's hard to put the cheese back into the trap. So to start with, thought we'd start with a few fun things. Or maybe it's not fun, but I've got, Mr. Trump has, of course, been under intense scrutiny for years now, and also with his taxes. And so we know that late last year, there was a state of New York tax fraud case against the Trump Organization. The star witness in that case, of course, was one of his top men, Alan Weisselberger. Alan had done some things that were probably not kosher, and he was admittedly singing for his supper to try to lessen whatever sort of jail sentence that he would face, oftentimes cooperating with the government on other investigations they've got going on can help you. So over 2 emotional days on the witness stand, Mr. Weisselberger admitted that he had reaped about $1.8 million worth of indirect or hidden compensation, allowing him to evade hundreds of thousands of dollars in taxes. The benefits included rent-free apartment in the Trump building. I guess it was overlooking the Hudson River, very nice little spot. He had leased cars for himself and his wife. And then also private school tuition for his grandchildren. Apparently, Mr. Trump personally paid the tuition, and Mr. Weisselberger testified to that, linking the former president to the broader scheme. To support the contention that Mr. Trump was explicitly sanctioning tax fraud, the prosecutors produced a document that he signed, said he showing that he authorized one of the scheme's crucial elements, and that is reduction in salary for other executives who were receiving clandestine benefits. So from a tax perspective for the Trump Organization, there really wasn't all that much of a tax savings for them, doesn't seem like to me, because if they would have classified this as compensation, it would have been a deduction for the company as well. And so maybe they saved a little bit on employment taxes, but the tax for the company was fairly minimal, especially when you're talking about a big organization like that. The penalty they were hit with was a $1.6 million fine. Of course, corporations cannot go to jail, just get hit with fines and so forth. So that was going on there, and we know that the state wants to tax as much as it can, and if you do business in the states of New York or California, you know that that is definitely the case. And I've also seen in my own practice lots of different arrangements and promoters out there that are doing things to help people lessen tax burdens by using fringe benefit arrangements. And those are hard to qualify for, and you got to be very careful with fringe benefit type arrangements. And that's sort of what the Trump organization used here. So here's the golden rule for tax. And I've actually heard people in the IRS say this, that if it sounds too good to be true, then it probably is. It also doesn't help Mr. Trump that he is one of the most scrutinized people in American history. Not to be undone, we also know that there are investigations going on the other side of the political aisle, and Mr. Hunter Biden is the prime focus of the efforts on that. So there's been an investigation apparently going on against Hunter Biden for years now, I think. And I heard recently that there are 3 tax crimes that they're looking at, and then also a charge related to a gun purchase. The possible charges include 2 misdemeanor counts of failure to file taxes, a single count of a felony tax evasion count, and then also the gun charge. People sort of are surprised to find out that there's actually a crime for failing to file your taxes on time. It is just a misdemeanor, but it actually happens a lot more than people know. And in fact, this is surprising to me, but I've represented some criminal defense attorneys over the years, and that's one crime that they don't seem to think is all that important. And so a lot of people that are even criminal defense attorneys will not file their returns on time, but it is a crime, and so important to get it fixed. One of the most famous people to ever be convicted of failing to file a tax return was the actor Wesley Snipes. So, well, how is it so easy to convict somebody of failing to file a tax return? Well, kind of. It's one of the easier crimes probably for the government to prove up, but they also have to prove that the person willfully failed to file the tax return. And so willfulness is a harder standard. It's one of the hardest standards to meet in criminal law. And it basically requires the government show that the person voluntarily violated a known legal duty. Well, everybody knows that, or most people know, that filing your tax return on April 15th is the law, unless you get an extension. But there's a lot of things that can go on in people's lives that could take away from the fact that they were willful and not filing the tax return. So maybe they've got illnesses in there, maybe they've got family issues, maybe they've got drug problems. Apparently that was the case for Mr. Biden. So maybe they've got a good case against him, maybe not. But in a plot twist recently, an IRS special agent, and those are the guys that actually investigate crimes and make recommendations to prosecute, is seeking whistleblower protection now. And he is trying to disclose information about what he thinks is the mishandling of an investigation. And he thinks that there are examples of preferential treatment in politics, improperly infecting decisions and protocols that would normally be followed by career law enforcement professionals in similar circumstances if the subject were not politically connected. So I think we just had the Durham report come out, I think it was last week, and that Durham report found that there was similar problems with an investigation on Mr. Trump recently. So it's a shame that politics and criminal law enforcement are getting mixed up. Doesn't seem like that should be the way it is, but it is. And I would say that if you are getting into politics or want to get into politics, not sure why you'd want to, but get ready for a massive onslaught of interest into yourself and your family members. Okay, now on to some really interesting stuff involving that $80 billion that I was talking about a little bit earlier. So the IRS has got this money coming into them. Unless there's some sort of deal here coming up with the budget that's going to take it away. I doubt it. I haven't heard that. But I think it's pretty important that the IRS be funded so that they can do what they need to do to close the tax gap and do what they're supposed to. So I thought this was interesting. They had a strategic operating plan that came out here recently, and they have a plan for how they're going to use that money. So that's what I want to talk about a little bit today. You probably didn't know this, but the IRS actually has a mission statement. And that mission statement is to provide America's taxpayers with top quality service by helping them understand and meet their tax responsibilities and enforce the law with integrity and fairness to all. Sometimes I think they fall pretty short of that mission statement. It sounds pretty good, but I feel like they fall short. Anyway, so the strategic operating plan has sort of 5 objectives to it, and we're going to talk about those in a second. But one of the things that the commissioner in issuing this report urged is that this funding issue is so important to the proper operations. And he noted that he cannot overstate the importance of sustained annual resources for operating costs. To help put this issue in perspective, the IRS funding has steadily declined over the last decade, causing suboptimal staffing and investment. Anybody who's ever had to do anything with the IRS the last 2-3 years can attest that the customer service and so forth is far from optimal. But here's some statistics. So in 2010, there were over 95,000 full-time employees at the IRS, and the population was 310 million people. Today, before this budget increase, the IRS is actually 20% smaller at about 80,000 employees, whereas the U.S. population has grown by about 7%. So we're really at levels last seen in like the 1970s in terms of the size of the IRS. And this is my opinion. If you ever work with the Texas comptroller, you can get your issues dealt with relatively quickly with them. Some of the auditors are a little bit slow, and if you ever get into the administrative hearing process, that's not fast, but there's always somebody to call and get answers from, and you can generally get your issues resolved quicker. And having something that's efficient like that has got to help business. The IRS, on the other hand, you can have issues that linger for months, years, and sometimes I've had cases linger for a decade. It's a little bit crazy. And the other thing to note is the Internal Revenue Code. I've got a copy of it here. It's about 4,000 some pages and super small print that I need to get a magnifying glass for to read. Every time that they pass a new law, whether it be the Infrastructure Act that Biden passed, or the different tax laws that passed during the Trump administration, or even previously, it oftentimes runs right through the Internal Revenue Code, making it super complicated and making the IRS responsible for doing even more than what they did previously. So it would be great if we could simplify and get rid of all those different provisions and get rid of the tax credits for all these different businesses. But unfortunately, I don't think that that's ever going to happen. I don't think that the Republicans that want to get rid of the Internal Revenue Service, that that's ever going to work, and go to some sort of state sales tax, because people have gotten used to the benefits, have designed their business to use those tax benefits, and so it would be a major change for that to happen, even though that might be the best thing for the future. Okay, so the 5 different topics here are listed there. The first one is to improve taxpayer services. And the IRS actually says they want to help taxpayers receive the proper incentives that they're entitled to. So you may file a tax return and forget that you're entitled to this credit or that credit. And apparently the IRS is going to help inform you that you should have taken those and help you get it fixed. That would be great. The second one is that they say that they are going to quickly resolve your problems. As I mentioned before, dealing with the IRS is never quick, and I welcome a quick resolution of problems. I think it's good for business in general. Third one here, there's been a lot of talk about how tax enforcement is only going to focus on the rich people, I guess over about $400,000 worth of income. So if you're in that category, then maybe you need have something to worry about. They are hiring a lot more people, and interestingly, the IRS has been focusing its efforts a lot on low-income areas of the tax code, like the earned income tax credit. There is a lot of abuse there for sure, and it comes mostly from unlicensed tax return preparers that you'll see in some of the strip malls. They have some techniques and so forth that are not kosher, and it causes problems. But then the IRS, the audits that they take focus on low income folks, and they just don't have so it's a little bit easier to deal with. They don't have the manpower to handle the more complex things that some of the promoters of tax shelters and so forth that aid the rich are handling. So all right, number 4 is that they are saying that they're going to improve technology. We'll talk about that. And then they want to attract a bigger and better workforce. Okay, so talk about the one of the first ones here, and that is this notion that they're going to help taxpayers meet their obligations and receive the incentives to what they're entitled to. So they've got things like they're going to provide taxpayers with on-demand customer service or service that you can schedule ahead of time. They're going to allow taxpayers to actually securely exchange information with the IRS electronically. They're starting to do that now, which is great. In the past, you've had to send in letters to a service center. It gets processed. It takes months for them to answer it. If they ever answer it, some things just go into a dark hole and nobody knows what's going on. And so I welcome the idea that we can actually email the IRS, albeit securely, which is important. They're going to improve self-service options. So if you've got issues, you can go online and get information about your tax account. So getting transcripts and figuring out what information is where, because that's one of the major things for businesses is they don't know what the IRS is doing. And so if you can get information yourself from the IRS, that's going to save a lot of time and effort trying to call people. They're also going to deliver proactive alerts to people. So, for example, one of the biggest problems that businesses face is dealing with employment tax compliance. And so if you don't file an employment tax return, for the quarter. Normally, it could take months, many quarters for the IRS to come along and say, hey, you haven't filed a return. You probably need to do that and get somebody associated with the case, because if they don't do that, the problem often snowballs and becomes a problem that the taxpayer or the business really can't deal with very effectively. Last thing here is that they're going to make it easier for the IRS to get paid, which I welcome that as well. It's oftentimes people will say, hey, I just want to wire some money to the IRS. We're closing our deal. I know we owe the IRS some money. We'll wire it to them and make sure that it all gets done appropriately. Well, right now you really can't do that. It's amazingly hard, and you have to send in a paper check, and then who knows if the paper check is going to be processed timely, and it just creates problems. So they're going to create ways for the IRS to actually get paid in a little bit more timely fashion. Okay, next one here is resolving problems. The IRS apparently with their new system is going to identify problems with returns that get filed so that they can be done quickly and easily. Maybe you forgot something, maybe there's some calculations that are incorrect that can be dealt with on a quick basis, fairly immediately after the filing of the return. So that would be great. They're going to develop taxpayer-centric notices that are understandable. Oftentimes people will get these IRS notices that seem like they're Greek and people are scared to read them. They're supposed to be redoing these into a way that's more easy to understand. And then if you do end up with IRS collection issues, they're going to have proactive debt resolution to solve your problem in a little bit quicker manner. Right now, if you wanted to get a tax liability paid for, doing an installment agreement or some other sort of collection alternative, we call it, it can take a long time because you have to get somebody assigned to your case, and there's not too many people to assign these days, and so it just can sort of linger. They file liens that are they're damaging to the business, and so getting proactive debt resolution, I'm all for that. So hopefully that actually happens. Okay. All right. Going on to tax enforcement. So we've got, we know that the IRS is using a different way of going after people these days. So they're developing a computer system, and actually they've already started. And that's one of the bigger things that we'll talk about here in just a second, is that the IRS has got a computer system that dates back, some parts of it date back to the JFK era, where there's this master file system and it gets updated like every 2 weeks or so, and it's just not real time, and it causes lots of problems. There's miscommunications, and so they're going to have a new computer system that's more analytics driven. And so I feel like what they're really doing is they're going to be able to Google people with tax problems, in effect Google them, and find all sorts of problems and have more analytics that help them find problems with people's tax returns. And they're going after, they're expanding enforcement of large partnerships. We know that there's this new partnership regime called the BBA that requires a lot different treatment. And there have been abuses from large partnerships in the past. And so we can expect that large partnerships are going to get audited more frequently. High income folks are going to get audited more frequently, and they're going to be smarter about how they do that. And then also they're focusing on campaigns, and we'll talk about some of the campaigns in a little bit here in terms of what they're going to be doing from an enforcement standpoint. So it's a little bit of a scary time to be dealing with this, and the IRS has got a lot more tools and a lot more power, and they're going to be smarter about how they handle things. Okay, and so in terms of technology, it used to be that the IRS would have this thing called the DIF score for a tax return. It would tell them, hey, we expect that a company with this much gross revenue is going to have depreciation deductions in a certain range. And so but if that, and nobody ever knew what those DIF scores were, they kept it sort of top secret. And if you went outside of those norms, you were likely to get audited. And so that still is going to exist in some form or fashion, but it's going to get a lot smarter, like I've been talking about. So I actually welcome the changes to the computer system, because it's a main reason why the IRS is inefficient and ineffective. And so I think it'll help tax administration greatly by having this. But like I was saying before, it's going to be a lot smarter than it was before. Okay. Before I move on to LB&I, they are hiring 80,000 or so employees. And I go on to LinkedIn every once in a while, and I'm amazed by how much opportunity there is to work at the IRS. Attorneys, auditors, even the criminal enforcement folks, they're hiring like crazy. So that's happening. People say it's going to take a couple of years for them to all get trained up, and they're going to have people retiring. So it's the amount of new people is going to help at least cover the people that are retiring, and hopefully build up a little bit on what they need as well. Okay, so the IRS is set up in different divisions in terms of what type of businesses there are. For small businesses, there's a division called self-employed division. But then for larger businesses and international, there's the large business international group, and they handle audits of companies over a certain size. So they started in 2017 identifying certain campaigns that they were going to really focus their efforts on. So instead of being broad in terms of looking at these DIF scores that I was telling you about, and not necessarily being focused on their efforts, they're definitely focusing their efforts on specific areas. One of the areas I got pretty highly involved with is this thing called the 179D deduction. It's a deduction for commercial buildings and getting into some energy efficiency things. So the IRS had a campaign going on against that industry. It's now over to a large extent, but they've added on new things. So right now they have about 50 different things that are part of their active campaigns. And so some of the notable ones, and we'll talk about some of them here, are micro captive insurance companies campaign. That's the campaign they have. Virtual currency is a huge thing. And then syndicated conservation easement transactions are also a big issue for them, where they've got litigation going on and different things going in those areas at a big point. So the one thing I'll note that is, if you have any issues that currently under a campaign, it's probably very wise to go in, look at your records, get with your accounting group, and make sure that you've got everything very tidy in terms of records and things that you need, so that if you do get audited, you've got everything close at hand that can help you get through an audit quick. In my opinion, the quicker you can get through an audit, the better. I almost never like to extend the statute of limitations to let the IRS dig into things quicker, but so if you can answer questions on a quicker basis, usually can get you in and out of an audit better and faster if you're thoughtful about what you want to do. Another thing here is when do you need an attorney to help you with an IRS audit? Typically, I would say that your CPA that prepared the return is the best one to handle the audit, understands what your situation is. But there's a couple exceptions to that. One is if you know that it's a hot area that maybe has some grayness to it that you might need to go to litigation over, go to tax court. Having an attorney involved is pretty important because things that are said during an audit are admissions. And I've had just countless examples of CPAs that just didn't really understand what all that meant and said things that maybe were incorrect or just poorly worded that hurt the client at the end of the day. So you got to be very careful about how you answer information requests from the IRS. The other thing is consider whether you've got the appropriate reliance on tax professionals if you do have a problem. So let's say maybe you got into a micro captive insurance program, and micro captive insurance programs are completely legitimate. They're just abused from time to time. So you want to make sure that you've got not the guy that sold you on the product and told you that it was the greatest thing since sliced bread, but rather you want to have an independent person look at whatever that program is, and hopefully that person's a certified public accountant or a tax attorney that can tell you whether the program is good or not. If you don't have somebody that's independent, then your chances of avoiding penalties go down drastically. So always very important to get independent eyes looking at whatever you're doing. Okay, first one here is cryptocurrency. Cryptocurrency is here, and I think it's probably here to stay. It's going to change over time. This is a relatively new area that people don't necessarily know how to deal with it. We know that when you have cryptocurrency, the IRS treats it like property. And so every time you buy and sell things with virtual currency, you have to report it like it's capital gain or every time you do it. So it's sort of a pain and an accounting nightmare. One of the things I think is most interesting about cryptocurrency in the crypto world is the use of this for other purposes other than merely buying and selling things. So an example of this is something that happened a number of years ago. There was a hotel in Aspen that tokenized some partnership interests in a hotel, and they needed the money to pay for improvements and didn't want to get a bank loan, so they took about 20% of it and offered it to the public. People bought, I think they were called Aspen coins or something like that, and it was a method to fund that the needed capital improvements that hotel had, and so interesting idea. You can see how that could be problematic. There's security rules that people don't necessarily know how to deal with right now. It's a big topic in the securities world, and it's a big topic in the tax world. And it's also an area where there's bound to be tons and tons of bad actors out there, and it's important to be careful. But one of the really neat things about it is it's really easy to buy and sell interest in, say, that this Aspen hotel by just buying and selling these Aspen coins. So instead of buying somebody's partnership interest, getting an attorney involved, helping them assign things, makes it a little bit simpler. Okay. Next one is the infamous employee retention credit. And this actually is not one of the campaigns that LB&I has, but I put it in here because I feel like it's so important. I myself have gotten inundated with emails, spam type stuff saying that they can help my company with qualifying for the employee retention credit. And the employee retention credit was really designed for companies that were having hard times because of the pandemic, like the PPP loans. It was designed to help people retain employees. The problem is unlike the PPP loan, you didn't necessarily have to show that there was a full or partial suspension of operations and that there was going to be a decline in receipts. Like it was much easier to qualify for the PPP loans than for the ERC credit. And the problem is that a lot of companies didn't necessarily have a full suspension of operations. There's a lot of people that were deemed essential workers, so if your company wasn't shut down, that's not good. But there are other ways that your company could have been damaged, like maybe you've got vendors or whatever that were shut down because of the pandemic, and maybe that affected your business. And so there's some gray area in here a little bit, but there's actually a lot of fraud in it. And it turns out that this employee retention credit is now the number one thing on the IRS's dirty dozen list. And so they're after it. They're investigating folks. And one thing I would say about this, sort of like what I said before, when you have an employee retention credit issue, you want to make sure that you get an independent person to look at it. The folks that are selling the stuff are folks that are sort of consulting firms that may be very good, but promoters, you cannot generally rely on them if they're not independent. Okay, syndicated conservation easements. This is actually one of the things that Donald Trump likes to do, is syndicated conservation easements. And I'm not sure exactly how he got involved in them, but they are a big topic. There's lots of litigation going on all around the country, and mostly in the Southeast. That's where a lot of the action is happening right now. And what happens with these is promoters will set up a partnership and put land into it. And I'm giving it a very short shrift. It's more complicated than this, but they put a piece of land in there that's maybe they want to use it for conservation purposes, and so they get people to invest to help buy the property, and then later on they get an evaluation person to come in and value it in its highest and best use. And so the valuation that comes through is oftentimes multiples of what was actually paid. And so what it actually paid and what the highest and best use are, they can be different, no doubt. But oftentimes they're like tenfold, or I've even heard of 15-fold. So people will put money into it, but then get a charitable deduction that more than makes up for the amount of the investment that they've made. So there's criminal cases going on against those, civil cases. And oftentimes the folks that set these things up will say, hey, we've got an insurance policy, and they do, but the insurance policy generally only covers the attorney's fees to litigate the matter in tax court. So that doesn't necessarily help people if you're unsuccessful. Okay, moving on here, Puerto Rico. Puerto Rico has got some laws down there. They've got a sort of parallel tax code to the Internal Revenue Code, and they've made it such that there's incentives to move down there, business or high net worth folks to move down there, where you can actually pay little to no income tax by going down there. Sounds good. You're a little island paradise, and you don't have to pay very much in taxes. It sounds good. The biggest issue is that you have to be a bona fide resident of Puerto Rico. And that means you buy a piece of property down there. You have to to qualify for it. And there's been problems with people not really being bona fide residents of Puerto Rico and trying to qualify for this. Micro captives. So micro captives are also a legitimate thing, but there's a lot of abuse here. People are setting up insurance policies. They may even keep their old policy, but just add to it. And the price that they're paying for the policy is not market, and it covers things that are not necessary. In order to take a deduction, it's got to be an ordinary and necessary business expense. And people are making abusive decisions with micro-captive insurance companies. Okay, high income non-filers. This is actually an individual thing, and there's a lot of people out there that just aren't filing tax returns, and the IRS has got a computer system that's finding those people. So maybe you live in a South Lake or Preston Hollow or something, and you've got a nice house and you just not been filing returns for years. Well, the IRS has got a system to find you. So it's time for those folks to come in out of the cold. We go a little bit quicker here. So fact of filing accuracy is also a big issue. So if you've got any sort of activity in a foreign country, you want to make sure you've got an international tax person that understands what your obligations are. There's all sorts of different forms, and sometimes you have to report things 2 or 3 times on your return, and maybe sometimes on your individual owner's forms as well. So be careful about that. It's a big area. There's banks are reporting to the United States on who has these bank accounts, so it's getting known, and they're going after folks. Okay, moving on to criminal investigation. So here's a picture of Joe Garza. He's a tax lawyer here in the Dallas area that actually got indicted earlier last year. He's pending trial, and the IRS or the Department of Justice says that he was a tax shelter promoter, was involved in the son of boss stuff. And basically what his situation was people say it was a money circle. At least the government says that. I'm not sure if that's true, but what the government does is they look at this thing called the economic substance rule, and even if your situation qualifies technically, there's this economic substance doctrine that's codified now that can take away the advantage if there's no economic substance other than tax benefits. Again, looking at independent counsel to help you look at that is important. Employment tax fraud, I was talking about that a little bit earlier. It's a huge issue, probably their number one thing. The government thinks that if you do not pay your employment taxes, that it's basically stealing. And they're going after it big time. If you were in a situation where you haven't been paying your taxes, but then you pay your rent, you pay net payroll, this is a way that not only the business can get in trouble, but the individuals associated with the business can become personally liable for the taxes and go to jail over it. Bank Secrecy Act. So this is stuff like depositing large amounts of cash. This is a big priority for them. They're seeing it more and more. And so using cash to buy things and deposit money. So this is really a money laundering issue, but the IRS is pretty involved in it. Okay. They've got lots of general tax priorities. They say they're going to go after this, maybe because of the additional workers that they've got. I have not seen them going after general tax fraud as much, just because they have lower resources, but they say that this is going to be a bigger deal. Okay, so to finish up my presentation, I only have a little bit left. There are, if you find yourself in a problem, or you think you have a problem, before the IRS gets to you, there are solutions to it. So maybe you've gotten into a micro-captive, or you've gotten into a conservation easement. You might be able to do this thing called a voluntary disclosure. Or maybe you're even one of those high net worth folks that hasn't filed returns in 10 years. There's things that you can do. The general rule of these voluntary disclosures is that they're done by people that have criminal concerns. And what you generally have to do is file 6 years worth of returns IRS can make you go back further, but generally it's 6 years. They want you to pay the tax, interest, and then they hit you with a one penalty for one of the years. So coming out of the dark can save you money. And even if you don't have all the money to pay it up front, you don't have to pay it. You can work out payment arrangements with them as well. So voluntary disclosures are very important. If you've got international tax issues, there's other programs. There's this thing called the Streamline program, where you pay a much lower penalty. The penalty under the voluntary disclosure program for international assets is they want 50% of your account balances, which is pretty huge, but better than going to jail. But there's other programs for people that were non-willful. Maybe they got some money inherited from a family member, had no earthly idea that you were supposed to report these things. Maybe they're from a foreign country that's not used to worldwide income type taxation. So the voluntary disclosure program is a great program, and it can save you a lot of hardship down the road. There's a whole process to it. There's a pre-clearance that you should do, and you should always do a voluntary disclosure under the auspices of a tax attorney to maintain privilege. There are CPAs out there that are doing this. I think it's probably malpractice for them to be doing voluntary disclosures. It's important that they be involved in the team, but we always set up a Covell agreement, which is a way that we get them under, working for us and figuring out what the status is before we, go ahead and do it. So there's a pre-clearance process. Then you file returns. There's a little mini audit that they usually do. And then they expect that you're going to pay the liability or get into an arrangement to pay it. Next one here is this thing called a quiet disclosure or a qualified amended return. And so a quiet disclosure, people say, hey, that voluntary disclosure program, that's sort of a high penalty for me to pay. And I don't want to pay a penalty, and so I don't want to do it. Well, you can do this thing called a quiet disclosure, which is basically filing returns on your own. It's not under this program, so there's no protection for any sort of criminal exposure like the voluntary disclosure program has. And so you're taking a big risk there. Now, if a special agent comes in and sees that you filed returns on your own before anybody got to you, does that maybe make you less of a target? Maybe. And so that is an option, and it's sort of, you have to give the client all the options, and they can weigh what's what risk tolerance that they have. Then on the other side, if you've got a situation where you're not in the criminal area, you just maybe have made a mistake, there's this thing called a qualified amended return. And so a qualified amended return is a return that is filed before the due date of the original, is filed after the due date of the original return, but before a series of important events. And so in other words, the qualified amended return has to be done before the IRS gets to you. So the other thing is that it cannot be a fraudulent return, can't be a criminal return, but it has to be done before the IRS contacts you about an examination. It has to be done before there's a 6700 investigation, which means that if you're in one of these micro captives and the promoter has gotten contacted, then it's too late. It has to be done before the certain pass-through entities are audited, or there's John Doe summonses that are issued. So there's lots of different things that can disqualify you from an amended return, qualified amended return. But the beauty of a qualified amended return is that generally you're not going to get hit with accuracy penalties. Okay, last one here is settlement initiatives. And so whenever they have a big tax shelter going on, or not whenever, but oftentimes when they have a big tax shelter that they're just overwhelmed with, there's no way that they can litigate all these different things. They'll set up settlement initiatives where they ask you to, full pay the tax, and they hit you with a much smaller penalty, like say 5% penalty instead of a 20% penalty, or a 40% penalty, or a 75% penalty. And those oftentimes are very good deals for clients to take advantage of. They can be very dangerous as well. Alternative fee arrangements are dangerous. So contingent fees are generally frowned upon by the IRS. It's hard for tax attorneys, CPAs, anybody who's under the auspices of this thing called Circular 230 to qualify to do those. And so those are very dangerous, and they actually may be required that they be disclosed. So always get independent tax advice. Get a written opinion from somebody that says that they've looked into all the facts and circumstances. They've had the chance to look at your situation, ask all the questions. And then lastly, solve your IRS problems before the IRS solves them for you. I really appreciate the opportunity to chat with you all today, and I hope everybody has a great Memorial Day weekend.